Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Thursday, the 18th of May, 2023, and we have our regular Thursday guest, David Kuo. He's the founder of Smart Investor out of Singapore. David, as always, great to have you on the show.
Selamat tengah hari, Brian.
Selamat tengah hari. Now, David, before we get your insights amid that nice backdrop that you have, we're going to take a look at crypto markets first, and then we're going to take a look at regional stock markets. We start with Bitcoin, which is at 27,318. It's up 0.95%. Ethereum is at 1,823. It's up 0.01%. Now, looking across to regional equities, we start with the Straits Times Index, where you're at. It's up 0.29%. Bursa Malaysia bucks the trend. It's down 0.02%. Over in KL, Shanghai is up 0.84%. The ASX All Ordinaries is up 0.5%. The Nikkei is up 1.52%. The Hang Seng is up 1.07%. And rounding up the numbers, we've got the Kospi, which is up 0.72%. David, your views on market performance in the first half of the day?
Follow the leader, Brian. Follow America. America was up, and so therefore Asia takes its cue from America every single time. And so it's not really a huge surprise that many Asian markets, apart from your KLCI, are up. What is quite interesting is that when you have a look at the breakdown of, say, the Straits Times Index, a lot of airline-related tourism stocks are doing pretty well. And over in Malaysia, your Malaysia Airports is doing pretty well. And I think this is really on the back of the results that came out from Singapore Airlines. Best profits in 76 years, and they resumed their dividends, and they're also paying a bonus to many of their staff, Brian. So it looks as though the open trade, whatever you want to call it, the reopening trade is doing pretty well. So Singapore Airlines is basking in the sunshine right now, good profits. But I wonder how long that's going to last, because I think in the case of Singapore Airlines, they were pretty smart. They kept a lot of their planes very well maintained. They retained a lot of their staff. And as soon as everything reopened after the pandemic, they were one of the first airlines to start flying again. But some of the others maybe mothballed their airlines and decided to wait a little while. So once they come back on stream, then I think there will be competition for Singapore Airlines. But for now, they can charge sky-high prices, which is deterring some people, including myself.
Now, David, I want to now shift the focus to what's been worrying investors over the last couple of weeks, really the US debt crisis. And it seems here now that the US debt crisis has been averted. Is that really the case? And if so, what's next?
Brian, that was always the case. I was never worried about the debt ceiling. The number of times I've heard people talk about, oh, the debt ceiling, what's going to happen if the American government doesn't raise the debt ceiling? Will America default on its debts? The answer is no. So all the time that they were talking about the debt ceiling, stock markets were showing a little bit of concern. And every time they fell, Brian, I just went in and bought. I mean, people were very concerned, particularly say insurance companies and banks that held on to US treasuries, and they would say, well, what would happen if America were to default? It means that those treasuries are virtually worthless. That was never going to happen, Brian. Not in a million years is that ever going to happen. I mean, there might be a technical glitch where America may not be able to pay its interest or its coupons on a particular date. But apart from that, there was nothing really to worry about. And I certainly wasn't worried. And I just carried on as though life was normal, Brian, which is the way people should be investing.
Now, then, David, still on America, given the data that's been out over the last couple of days, is the Fed still going to hike rates, or is it done?
That is the $64,000 question. Will there be a rate hike in June? And the answer is, I think it is on a knife edge at the moment. And that is the way that I think, the Fed wants the world to behave right now. They don't want to preempt or to send signals out there and say we're going to be increasing interest rates in June. But if you have a look at the data, let's have a look at the real data first of all. The Fed fund rate is above the inflation rate, which is where it needs to be. where it should
Yeah.
be in order to keep a lid on inflation. But um, two things can happen. Inflation can accelerate, which therefore means that the Fed needs to act even harsher than it has been so far, or alternatively, inflation may dip. But there are no signs at the moment that inflation is dipping. And so, does the Fed really want to drive down the inflation rate to 2%? If it's determined to do that, then it will have to increase interest rates in June. But I tell you what, whether they increase or not is not going to change the way I invest at all. I'm just going to carry on buying. And today I've been buying stocks, and yesterday I was buying stocks as well. So what the Fed does makes no difference to the way I look at the stock market, because I ultimately need income. And so therefore, when I have spare cash lying around, I go out and buy stocks, particularly those that will pay me a decent income. If not in June or July, then definitely in June and July in 2030. Thanks very much.
Now, so speaking of 2030 and having a crystal ball to look ahead, one of the things that could throw a spanner in the works of a lot of your hypothesis is really around the impact of AI. And AI is going to change and is already changing the way we are working so quickly since the launch of ChatGPT in November. What are your thoughts on this, and how does this impact us as investors?
Well, the thing is, I am not a technician, so therefore I don't fully understand what AI is supposed to do. The way I look at it is there's a tremendous amount of data out there at the moment that has been accumulated probably since the start of the internet. So back in 2000 and now, we've got 23 years worth of data that's just sitting around in uh, computers and storage centers all over the world, right? Data centers all over the world. And all that AI is a way in which they can tap into that data and try and come up with um, some solutions to problems that we haven't really found at the moment. And there is a lot of hype about AI at the moment. Every time I turn on the television and I watch Bloomberg and CNBC, and all I hear about, Brian, is AI this, AI that. And I just wonder, is is this really as pivotal as people say it is? I mean, some people have even sort of likened it to the invention of fire and how that was actually going to change the way we live, or maybe the invention of the aircraft when Kitty Hawk first flew, and it was going to transform the way in which we travel. Is AI really going to be that pivotal? I- I'm not entirely sure. I think of AI as being a lazy man's way of getting information. And it's almost like a lazy cook's way of cooking a meal for the evening. So you and I are enthusiastic cooks. We like to cook, right? But there are some people out there who would like to cook but can't cook. And so what do? They go out and buy the ready-made meals that you can buy in a packet. And with a pair of scissors, they snip off the top, and then they make themselves a sauce, throw in some chicken, and say to their friends and family, "Oh, we're having chicken curry tonight." But if you ask them, did they make it themselves? The answer is probably not. So what is AI? I think AI is number one. I think it's the lazy man's way of getting data, and I think number two is probably for the less intelligent people who want to get hold of data, right? And for the smarter person, I don't think we have anything to worry about because we use our brain rather than use data that is already stored out there. And so, is it really going to affect the way that I invest? The answer is probably not. But is there is there money to be made in AI? I think there is. And I think there will be lots of people out there, just like the analogy with the ready to cook meals that we have. There will be lots of people out there who will buy those ready to cook sauces that you can buy and pretend as though you've made your friends and family a curry for the evening. But is it really going to affect the serious chef? The answer is probably not, Brian.
All right. On that note, David, thank you very much for your insights and thanks for coming on the show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.